What is going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. I've had people in the past tell me that QYLD ETF is better than SCHD ETF. I'm going to compare both of them, and I'm going to show you why SCHD dominates QYLD. A lot of you guys that invest in QYLD, you may, in the long run, be the loser against SCHD. So we're going to compare them. We're going to go over the dividend income and passive income. And I'm going to show you a few things and few pointers as to why SCHD dominates QYLD. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. And let's check these ETFs out right now. So first, let's look at both ETFs versus the S&P. The S&P is right here in the yellow. So SCHD is technically beating the S&P in the past 5 years, which is very impressive. QYLD has decreased its price per share. Now, if you watch my previous videos with QYLD, I go over the box theory. So I'll put that video in the top right-hand corner explaining information about QYLD, why it's just stagnant. So, income lovers, dividend income or passive income lovers, do like QYLD. I mean, QYLD is a nice ETF for passive income. When I get older, that might be an option, them and RYLD and XYLD, because I like earning passive income, monthly dividends or passive income. So, that's one thing I may rebuy in the future because I have a goal of $2,000 to $4,000 a month on my quarterly dividends and $1,000 to $3,000 a month on my monthly dividends. And QYLD may help with that. So that's one thing that I'm looking at. Probably QYLD, RYLD, XYLD, and DJIA are covered call ETFs that are good income ETFs. So, one thing that you can do, and one thing that I've done in the past, I may do this again, is add QYLD, RYLD, and XYLD, and DJIA if they're ever come back, or if they ever get on M1 Finance, to a little fractional share portfolio in my dividend portfolio, so that once I start earning income with those guys, they can start pumping out passive income with their covered call options. And I'm going to compare both of these ETFs real quick to buy my quarterly dividend stocks, monthly dividend stocks. And the thing with SCHD is, these guys appear to be a pretty good traditional and or Roth IRA material because they're doing well against the S&P and they're increasing their price per share. So I always tell people increase your net asset value or net worth. Again, this is not financial advice for entertainment purposes only, disclaimer in the description, but that's what I look for in traditional and or Roth IRA stocks. And I have VTI, I have VHT and VGT, my M1 Finance fractional share portfolio. But SCHD does distribute those nice dividends so that I can maybe buy other types of ETFs. So that's one thing I haven't ruled out in the future, is having SCHD in my my traditional IRA. So let's check out both of these ETFs. Let's start with QYLD. So I'm on the Global X ETF website. So QYLD seeks to generate income through covered call writing, which historically has produced higher yields in periods of volatility. QYLD has distributed monthly dividends for 8 years. QYLD writes call options in the NASDAQ 100 index, saving investors the time and potential expense of doing so individually. So that's one thing I like about these guys. They do have covered call, they do the options in the NASDAQ 100 index. Their expense ratio is a little high at 0.60. So we'll go over that compared to SCHD. So, expense ratios are an issue. So here's our net asset value in the past year. It's down 18.97. So people are loading up on them and earning pretty nice passive income on that. Again, you're stuck in that box. Check that video in the top right-hand corner. So here's our top holdings. I'll just go over, some of them: Microsoft, Apple, Amazon, Alphabet, Nvidia, Tesla. So a lot of people do covered call options on them. Broadcom, that's another one. Texas Instruments, I've met some people that really like doing options with them. Starbucks is another one that people are doing pretty well with. So, with options. So, they have a pretty nice, like, since they're in the NASDAQ 100, they have a pretty nice portfolio. So, again, I only buy stocks that distribute dividends. But, with doing call options, it's not too bad. And again, right now, they're $16.11. So they are pretty cheap right now, which is nice for people who love earning passive income. So that's one thing that's nice with these guys is they're only $16.11. Now, let's go over their distribution history. This is the one thing that you need to be aware of. So this is, again, expense ratio, net asset value is decreasing. You just got to be aware of that. But let's check out their dividend distribution schedule. So here's one thing with QYLD. I have an issue with their consistency. So here's on 420, you get in 2020 you get 19 cents, and then 5/18 2020 you get 20 cents. Then you get 21 cents and 22 cents. Then you're back down to 18 cents in August. So there's not a lot of consistency, which is an issue. Then you get that lucky dividend in 12/30/2021. You're not going to see a dividend or distribution at 49 cents like all the time, or if not ever. So these trends are a little inconsistent. Look, 17 cents, 16 cents. So that's the one thing that's a turnoff with these guys. Their net asset value is going down. And guess what? Kind of correlated with the price per share, like 10%, right around that. So that's one thing that's kind of a turnoff there. Now let's check out SCHD. So here's some information. So first, their expense ratio is 0.06%. So the fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US 100 index. So its highlights are straightforward, low-cost fund offering potential tax efficiency. The fund can serve as part of the core or complement the diversified portfolio. Tracks an index focused on the quality and sustainability of dividends. Invests in stocks selected for fundamental strength relative to their peers based on financial ratios. So here's some information that we need to look into these guys. So I like going on their website. The big thing is what I like is their holdings. I'll go over their distribution. So first, their value is 75.26. They started in 2011 since inception. The index fund, like I said, is very attractive. So they have 103 holdings. Their portfolio turnover rate is 14.11%. Now that's a good thing because they look into things and see how things are going. So the yield is 3.41%. The yield is less, but that's okay because I'm going to show you some things regarding these guys. So here's a return monthly, which is nice. Again, these are quarterly dividends, but look at this return. So in 1 year, they're obviously down. Everybody's took a hit. So the average return, okay, if you look at everything in 10 years, in 12 years, so the market price in 10 years is up 12.11%. Since inception, it went up. So it's going up. So that's one thing that's attractive. So let's look at all of their holdings. So this is as of 12/21/2022. So Broadcom is at 4.26%. They hike their dividends. Pfizer hikes their dividends. I just got a dividend increase, 4.15%. Lockheed Martin, they usually increase their dividends. Merck, they usually increase their dividends, 4.05%. Pepsi, that's a huge dividend growth stock. Verizon, now they're a high yield, but still they do distribute a dividend that usually has consistently gone up. Coca-Cola is 4.02%. Home Depot increases their dividend usually. This goes 4.0. IBM, I'm a little iffy on those guys, but they are a pretty good high yield dividend stock. Texas Instrument, I just did a video on them, 3.88%. BlackRock, they usually increase their dividend. ADP, you got Altria, EOG Resources, 3M, Illinois Tool Corp, US Bank Corp. These are good dividend growth stocks. Kimberly Corp, Valero Energy. I'm just going down and down and down. Prudential, I got them. Cummins, that's a popular one. One Oak, I have them. Fastenal, they're starting to hike their dividend. So T Rowe, that's a beautiful dividend growth stock. So I'm going just top to bottom. I'm at 0.73% Huntington Bank shares. I own these guys. Regions Financial, I own these guys. They hike their dividend. Tyson Foods, I own those guys. They hike their dividend pretty consistently. Kellogg's, that's a popular one. E Corp, look at that. I own these guys as well. And guess what? They've been hiking their dividend. So they have really good dividend stocks. Snap-on, that's one I haven't posted a video on either. Franklin Resources, I own that one. There's a lot of them. Zion's is popular. Guess what? I own Flowers Foods. So a lot of these dividend stocks that I have in my M1 Finance dividend portfolio, guess what? They're in SCHD. I have a lot of confidence in those dividend stocks. That's why I continue to invest in them. They hike their dividends. And SCHD has hiked their dividends. I mean, I am so impressed with their portfolio. It is beautiful. Buckle. That's actually an interesting dividend stock as well, because of like Buckle jeans and stuff. So I'm just going top to bottom at what they bring to the table. That is a really good ETF with dividend growth. Now let's check out their dividend history. So check this out. This is what I call solid dividend growth. Now, a little bit in 2013-14, there's a little bit of inconsistency, but guess what? The price is going up. The dividend distribution is going up. So 2013, in the 20s. 2014, just cracked 30. 2016, it's in the 30s. 2018, it cracked 40s. It's consistently in the 40s. 2020, it's 54 cents. And then 2021, you got 50 cents, 60 cents. Now they're cracking the 50, 60, 70 cent range. So you're getting dividend growth with this ETF with a pretty decent expense ratio. So I just wanted to make it clear, SCHD, I mean, QYLD is good for passive income too, but SCHD hikes their dividend. They are, in my book, and again, my honest opinion, this is not financial advice, a really solid stock when it comes to being a traditional and or Roth IRA, and why many dividend investors love investing SCHD. They cracked the 70 cent mark. QYLD, so if you think about it, let's just think about this. So let's 16 times 3. That's not even close to 70. Okay, that's quarterly dividend income. The monthly dividends don't even mean anything all the time. So just think about that. So even if they crack the 20 cent mark, 20, 40, 60, SCHD's dividend, okay, quarterly income is still solid. So in the long run, SCHD is way better than QYLD. So think about this. I'm just trying to give you examples. 20, 40, 60, 80. That's all right, but these guys are getting up there. They're consistent. QYLD is not consistent. And I hope you enjoy the video on QYLD where I go over the box theory with them, because you are stuck in a box compared to SCHD. So make sure you hit that once I post the video, and I'll have it at the end of this video as well with QYLD, why QYLD you're stuck in a box. Let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I did my best at comparing these guys. I tried to be very straightforward as possible. I tried to make sure everything is within, I just try to make it very basic for you. So I'll have a video for you guys tomorrow, and you guys take care and have a good one.